All right, welcome to Trendy Options. Thank you so much for purchasing the line in the sand, or the LIS as we call it. Simply put, I put out a lot of videos, a lot of content on understanding what the line in the sand is, but because you've taken the time to trust in the system, I just want to quickly make this video to say thank you and just to give you a quick couple examples whether we're using the line in the sand on equity or the future side. So first thing, again, once you have this, you will receive alerts also in your messages, depending on what screen you have open. So for example, if we were to have, give me 1 second here, and this is just an example. Say you have one of these up and you have Microsoft, Melly, Shop, and T up. Um, you're going to get messages as long as you have the chart open, and I should say alerts. So in your messages, you're going to see something in here that's going to show you when price has come into the line in the sand and so forth. Okay, and so that's pretty cool. So once we come into the line in the sand, say we get a bullish formation off the line in the sand, you're going to be alerted that. Okay, but let's talk about the line in the sand really quick so you understand really quick what this is about. And so the line in the sand, we're just going to quickly represent that by a blue line. When price is above the line in the sand, we look for it to be support. Okay, so say that price opens up here, but then it starts moving back. We look for the line in the sand to go support. And even if we get a flush of the line in the sand, but price reclaims, we wait for that reclaim, then we wait for higher highs, and then our stop goes underneath the line in the sand, and we look to go long. Okay. When price is underneath the line in the sand, we look for the line in the sand as a target, and we also look at it to be resistance until it's not. We're looking for confirmation on this lower low. We're going short with a stop here, and we ride the price down into our next targets. Okay. Now this is more from whether you're trading on equity and you're just wanting to scalp, and you're looking for a good entry on the day. If for future traders, if you're just looking for that good 2 to 5 points, which is very, very lovely, right? And this is just an example. This is Apple. I showed you guys this the other day. This 220, 223.37 basically up into 226. Worked very well. And we actually had this trade. I believe this is when we had the tweet come out. And so I showed you the result on that Apple trade that we had there. So that was pretty nice. Another thing it does, when I was describing, if you also purchase the PMZ, you can see how well these work together. So we look for, once we break, so for example, you guys know this is a red box. That means price was below the line in the sand. Okay. And we know that if price wants to break above the PMZ, okay, which would be right here, and say we get support, we get that higher high, we put our stop here. We're looking for price to move into the line in the sand and then resistance until it's not. So what this does is give us a defined risk, which is here. Your risk is between the PMZ, remember that. And then we're looking for our reward up here. So for example, 220.39, you had this at 223, say your risk is only 40 cents here. Okay, and then you're looking for $3 up here. It's a nice way to gauge your risk to reward. Now, why does the line in the sand work? Let's go back to the white screen. When price is moving, okay, just like this, and we come to a close, so don't get it twisted. It's not a cash close. Sometimes the cash close is in line with the line in the sand, but the line in the sand is actually based on a time period and a candle formation. So what happens is if we pivot there, and then say, we get a quick spike, you create a little bit of demand in here, okay? And then your line in the sand is basically here, right? And price, say we gap up, right? And then price wants to move back down. We created that little box of demand in there. So that's why you see the support work there. Very cool, right? And then on the opposite end of that, let's go ahead and show you again my awesome drawings here. Line in the sand. Price is below the line in the sand. But here, say we were downtrending all day, right? And then we close, and then we pivot down. You create supply here, okay? So when price comes back up, it is resistance until it's not. So if we start to break down from here, like many times we do, what happens is this price just moved into a supply zone from the previous day or on that previous close. Okay, so that's what we're looking at there. All right. On the future side, um, very straightforward. We use the line in the sand every single day, so I'm aware that most of you know what's going on here. But you could see here's a great example. Price breaks PMZ, pulls down, and it comes right into the line in the sand and gives you about 7 or 8 points, folks. Big deal right there. And this happens over and over and over. And then when price breaks down below the PMZ, all right, and here's a great example again. This is just great because now that these will be on your screen, now that you purchase these, you can go back and you can study past performance and kind of get an idea of what you want to do. But anyway, so we get the signal, to go short here, stops up here somewhere, whatever your stop is. But notice when price leaves and it comes back up, notice how it rejects. Okay. Notice price goes up and it rejects. Notice how price goes up and it rejects. Okay. So very simple, straightforward strategy. Again, anytime that I'm trading the line in the sand, I'll give you 2 examples here. Typically, I'll have something over here in Active Trader where I've already set it up. So on the single side, let's say I have ES minimal risk. On my ES minimal risk, it's one point for a stop, 3 points to the upside. I would simply, wait for it to come down. Boom, just take the trade. If I get stopped out, it's $50. If I get my 3 points to the upside or downside, whether I want to buy or short, it's 50 bucks for 150. Okay, and then when I have strong conviction, maybe I change that from one stop or 1 point for a stop. I might say 2 points for a stop and 10 points for the target. All right, just kind of depends on what your threshold is for, or I should say your risk tolerance. Okay. As far as the list goes, I mean, that is pretty straightforward. So again, just one line can be so powerful, folks. One other thing, just real quick. I know a lot of traders talk about red to green. So the cool thing about the list is, again, price can be red, right? And then when we break it, we look for that support, and then we look for a higher high, and then we look to go long with a stop below here, and then we can trade off the list into the targets that I provide for you. But don't forget, I also have an awesome video on targets so that you can also find those targets for yourself and start setting up these awesome blueprints. And you have everything you need on here. And I believe this will be a great tool for you. And saying that they are just tools, they are just indicators, nothing's 100%. Do realize that always trade safely with a risk and a stop assessment and know your risk. Thank you so much again. I appreciate you. Have a great day.